Hi everyone, welcome back to my channel. Today I want to discuss a nice dealer positioning tool TradingView recently released that allows us to determine what market maker hedging activity will look like the last hour of the day. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradingView, and Elite Trader Funding. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. With all that being said, let's get right into it. So today we had a big bearish sell-off that occurred in the market, which was sort of anticipated. We had some bad CPI data and then a hawkish FOMC earlier in the week, and come Friday we just had a massive sell-off. Now this was actually expected, and if we go to TradingView and we go to the market dashboard and look under options, we can see going into the day, so this is from yesterday, September 22nd, 2022, we had a red market dex bar going into the day. This is the current day. This is basically what formed today. So we're not accounting for this bar. I want to talk about what the view was like as yesterday. And so we had this big, this red bar on market dex, and then market net flow from the day prior. Let's see if this works here. If I pull this up, we can see puts were above calls for the day, which essentially meant that we had a bearish outlook. And then we also had a massive sell-off end of day, which corresponded with market puts being larger than market calls. So going into the day, it sort of seemed like we would have an overnight sell-off based off this. So if you're using market dex and market net flow, as I've talked about in previous videos, you could have opened puts overnight and hold those, and you would have made some really nice profits going into the day. So hopefully some of you, if you've already watched those videos, hopefully some of you did indeed catch that. So what I want to talk about though is at open, and let's just look at the chart for the day. So I have ES up, micro ES up here, and we can see that when the day opened, now overnight, we had a massive sell-off, which market net flow and market dex helped predict. And we could see that we just kept having breaks of structures, which kept creating a new downtrend. We were passing some major gamma levels. And then we get into market open. We had a little buy up before market open. It looked like we were going to have a change of character, meaning that we were going to shift to be more bullish. But then market actually opened and we reject out of this order block, have a change of character, meaning we shift back to a bearish downtrend. And we just proceeded to sell off the whole day. And so there were several opportunities here that we could have taken positions. Not all of the order blocks and everything are showing here, but it ended up being a very lucrative day. We could see that we were holding this downtrend line nicely. Things continued to rapidly sell off. And so this is showing micro ES, but it doesn't matter if you trade ES or if you trade SPY, or even if you were doing IWM, QQQ, doesn't matter. It all looked the same today, right? It was all a very bearish sell-off. However, at no point did calls end up moving up and shift above puts. At no point did we have any indication that for the last hour of the day, we would have this massive buy up. Now, the thing is, we need to think about this timing because this happens frequently. It's the end of the week, so it's a Friday. So we have a whole bunch of weekly expirations, and you can go through on the options dashboard and we can look at things like Charm and well, it's not showing now, but there would normally be a large charm build up for the end of the week, which we can see for September 30th going into next week. So we can look at things and we have an idea that, okay, it's a weekly expiration, so we're going to have a massive amount of options expiring off, but we don't have an idea of how that's going to impact the market. We don't have an idea if we're going to see a big run up like this. And the reason why it's notable that this is the last hour of the day, because the last hour of the day is when a lot of the market maker algos and market makers basically have to settle. They have to re-hedge. They have to account for all of these options expiring off. And so if they're short a bunch of puts, then they're going to have to do a bunch of buying as those puts get closed out. Or if they're short a bunch of calls, they'll have to do a bunch of selling as those get closed out. And up until recently, we didn't have a lot of insight into that. So what TradingView recently added, if we scroll down below market dex and we go to dealer's market diary, and this tool is just fantastic. And I want to show you what today looked like. So what this shows, it shows market calls and market puts from a customer perspective, and that's important to note. So this would be institutions or retailers that are buying calls and puts, and we can see that there was very little call buying happening, and there was a ton of put buying happening, which is indicated by this big red bar. And so this is total deltas in the billions, just so you get an idea of how much put buying was actually occurring. So if we think about what that means, we have all this put buying happening. And one thing to note is that if calls are below the zero line, that would indicate that people were selling calls. And if puts were above the zero line, that would mean that people were selling puts. But in this case, consumers, not dealers essentially, but basically customers are buying a bunch of puts, so they're long puts. So this means that dealers are short puts. Short puts, since customers are the ones buying the puts, the people that they're typically buying these puts from are dealers. And now that means that dealers had to sell those puts, which means they have to hedge accordingly. And I've done many videos on this. I'll leave some links to them, but if you look at my dealer position options Greeks and dealer positioning video, I also have done stuff on spot gex and gex and how we can actually see what kind of impact negative gamma and positive gamma will have as we approach various strikes. And actually spot gex worked incredibly well today too, showing us points that we would get held up at and bounce higher, or areas that we would move through quickly. But if we look here, so this means end of day, there's going to be roughly more than 4 billion puts, long puts expiring off, meaning dealers are now, all these short puts, these 4 billion deltas and short puts are going to expire off. So in order to hedge that, they're going to start buying. And that's exactly what happens at 3 o'clock when their algos kick in. They have to handle this as all these puts start expiring off, because now all these puts that are expiring today are 0 DTE. So that last hour, theta really kicks in and they have to start buying. And despite market net flow not really changing, we can see that all of a sudden 3 p.m. hits. So literally, I mean, right here, you can see it shows it as 259. I'll go to TradingView, but we can see right here, we have this doji 257. And then 3 o'clock, we just proceed to rip. And when we saw this, when we saw these bars coming in, so what I would suggest, and you should add this probably into your morning routine, is to always to check this, and also afternoon routine, because this did actually grow throughout the day. This does update every half hour, is knowing this, when we see a big bar like this, we have another one, not as big, coming up on the 7th. We have the 21st. Now, in this case, we can see actually for the 30th, this is interesting that customers are actually long calls and short puts, right? So if they're short puts, that means dealers are buying puts, which means that when those deltas get closed out, instead of having to buy, they're going to have to sell. So it sort of flips things around. So it can be a little confusing, but if we think about this with dealers being short puts, those get closed out. That means they have to start buying. And all of a sudden we get this massive run up. So we can essentially predict what will happen end of day and then apply that. And what I would suggest is, when we've been downtrending like this all day and we have a clean trend line and we get this huge breakout, and this breakout is so powerful that it creates a bullish order block and it creates these massive fair value gaps. That's what these blue squares are here, are bullish fair value gaps. And if you'd like to use this tool I'm using, if you haven't seen it yet, this is the Sonar Labs indicator suite. I'll leave a link that will give you a 10% discount if you use the link and the coupon code together. I love this tool set. It's amazing. I never have to mark up my charts. It even drew this trend line and everything, but that's besides the point. But we can see that we broke the trend line, we came down and retested it, and we continued buying up. This is a point, because we had this change of character, meaning we officially have shifted from a downtrend to an uptrend based on this break right here. And then we even retest that trend line perfectly and move up. This would be a safe point to start taking longs or start buying calls. You can do it here when you have this doji and you have these big engulfing candles occurring. You absolutely can do it there. But if you want to be more conservative, you want to be more safe, then this would be a perfect break and retest entry. And you can just ride that thing out the rest of the day, knowing that these positions are going to continue to be closed out, and continue to cause market makers to buy in order to accommodate for all those deltas from those short puts expiring off. So I hope this helps, and I hope that you can use this in your future trading. End of day, when we have these weekly expirations, when we have these big put builds up, there are going to be plenty of opportunities in the future. And keep in mind, it updates every half hour. So I would check this thing 2:30 every single day, take a peek at this, see what it looks like, and get ready to pick up a really nice entry if you start seeing this massive buying, or in other cases, if we see it the opposite occur, where dealers are now short calls or long puts, which would indicate as those expire off, they have to start doing some selling. It just means that we can expect these big moves end of day. So I hope you found this helpful. If you have any questions, I know it gets confusing when we talk about customers versus dealers, and so customers being long puts means dealers are short puts, which means dealers will have to buy to hedge. Again, I've done other videos on market maker hedging and how the Greeks play out, and the result of that hedging, and what market makers have to do in order to hedge based on those Greeks. So certainly check those out, because that's a much bigger topic, and I just wanted to keep this video as short as possible while keeping it as useful as possible. So again, I hope you found that helpful, and let me know if you have any questions. Feel free to leave a comment or message me in Discord or whatever or even Twitter. I don't check it as much, but and thanks for watching, and please, if you do remember, leave a like and subscribe.